Hi everyone, very good evening and welcome back to Grade B. So today we are going to talk about the India's insurance market and how it has having an impact on the Indian financial sector. So you got to use the different sort of data, etc. to what you can say, to emphasize onto your answer, to validate your answer, and we are going to use the data sets for this particular matter only. So insurance, see, all of this you might be knowing, facts also you might be knowing, but how you need to present it, along with it how many kinds of bifurcations you should be having. So this is going to be our area of discussion. Insurance is an integral part of the financial sector. Yes, it plays a significant role in the economy. How does it play? So it protects against mortality, property, casualty risk, provides us a safety net. Insurance sector encourages savings and provides long-term funds for infra development. The development of the insurance sector is necessary to support its continued economic transformation. So now, to justify the fact, we are going to use the data. India's insurance market is 10th largest life insurance market globally. As per the report published by the Deloitte in India, insurance market is slated to increase fourfold in size over the next 10 years. So with this, I have mentioned the growth prospectus of the Indian economy. Okay? How the Indian economy is going to grow. Life insurance sector, it is the biggest in the world with about rupees 70,000 crores premium yearly, and it is growing at a positive rate of 17% every year. Next is insurance penetration. So we have got two terms, insurance penetration and insurance density. Because you are the students of IRDAI examination, so I am hoping that you know these terms. But for those who doesn't know, please link the term density with the population, right? यहाँ पे आप क्या कर रहे हैं? The amount of premium that you have collected, you are correlating it with the population. And over here, insurance penetration, here you are correlating the insurance amount that you have collected along with the GDP. Fine, your gross domestic product of the nation. So this tells you your insurance penetration, and the another indicator is insurance density. Let us see. So insurance penetration in India is increased steadily from 2.7% around the turn of millennium to 4.2% in 2020, and it has remained the same in 2021. Life insurance penetration, it was 3.2% in 2021, almost twice more than the emerging market and slightly above the global average. However, most life insurance products, those are sold, they are savings linked with just a small protection component. The households, they still remain exposed to significant financial gap in the cases of premature death of the primary breadwinner. So yes, there are still the risks because the people are not able to take up the, the poor people who do not have the capacity to pay high premiums, they are the most underprivileged. ठीक है, आप समझिए, if there is a loss of a breadwinner in a poor family, it is going to impact very seriously. Why? Because they are already not having finance, they are doing really poor in terms of finances, they do not have the enough amount to pay the equivalent premium. So in such a scenario, सारी चीजें उनके against ही हैं. So this is what has been mentioned over here. Next we have insurance density. Insurance density in India, it has increased from US dollar 11.1 in 2001 to US dollar 91 in 2021. Density for life insurance was 69 US dollars and non-life insurance was 22 US dollars in 2021, in keeping with the relative faster expansion of the insurance market. So here in insurance density, what we are measuring? We are measuring the amount of insurance that we are collecting as well as the population that we are having. कि भाई इतनी आपकी population है तो इतने लोगों को तो premium pay करना चाहिए, इतने लोगों को देना चाहिए, right? Next is we have premium. So during financial year 2022, the gross direct premium of non-life insurers within and outside India registered an year-on-year growth of 10.8%. See, you have to mug up these data facts. These are really important to bulk up your answers, right? You have to use this. See, when it might happen that you know all the concept, that is really great, but how you will validate your answers, this is another important aspect which you cannot overlook. So this is the thing. Year on year growth, there is 10.8%. Next is net incurred claims of non-life insurers stood at 1.4 lakh crores in financial year 2022. It was primarily driven by rising per capita income, product innovation, as well as the customization. Life insurance premium, it registered an year-on-year growth of 10.2% in financial year 2022. Business contributing 45% of the total premiums recovered by the life insurers. Life insurance industry paid benefits of the 5.02 lakh crore in financial year 2022, and 8.3 out of which were on the death claims. So businesses, yes, because many businesses, they do take the life insurances. So hence, for their employees and other employee, as well as the key employment officers, right? Those officers who have been employed and whose life matters to the company very dearly. So that is the key managerial personals. Next we have the public listings. Now we are talking as per the stock market scenario, right? So India's largest life insurer, the LIC, went public in May 2022, raising US dollar 2.7 billion in the country's largest IPO till date. So the private insurance providers has also been seizing such opportunities. These insurers in the country, they were listed in the December 2021, making it 5th private sector insurer to the IPO. Now, once you have provided all the sort of data, next thing is, wait. The digitization of India's insurance market goes beyond telematics and customer risk assessment. Many digital platforms, they have emerged over recent year. They are offering different sort of bouquet of services to attract the customers, right? So they are increasing in FDI limits. Apart from that, they are also including services like the mutual funds related and all these additional sort of services. They are likely to facilitate increased flow in the capital, global technology, process, international best practices, etc. So here the additional point was FDI limits, the additional point was the other value added services, right, that the insurance segment provides us. Now next is, what are the major growth drivers for insurance industry in India? Why we now here you have to mention the factors, right? You have to mention the factors. What is fueling the growth of insurance industry in India? So basically you have to talk about the innovation, the coming up of new technologies. All these factors, they must be inclusive in your answers, right? So as per the Swiss Re Institute World Insurance Inflation Risks Front and Center report, India is one of the fastest growing insurance markets in the world. In total premium volumes, it was 10th largest globally. See, while mentioning the data, there is one pro tip. If you also mention the name of the report, this adds value to your data. ठीक है, ऐसे तो देखो means most of the times try that whatever data you are mentioning, you should have a credible source name as well. ठीक है, बहुत ज़रूरी होता है. But even if you do not have, please mention. So mentioning data is always good than not mentioning it. Apart from that, with an estimated market share of 1.9% and the second largest of all emerging markets, India is expected to emerge as one of the top 6 insurance markets in the world by 2030, ahead of Germany, Canada, Italy and South Korea. Now next is the major growth drivers as per the IBEF report. For number 1, we have growth in the financial industry. So India's robust economy is expected to sustain the growth in insurance premium written. Higher personal disposable income would result in the higher household savings. Next we have innovation and efficiency. So insurance market in India, it is expected to reach US dollar 222 billion by 2026. How? Robotic process automation, artificial intelligence, they will occupy the center stage. They will bring new data channels. better data processing. They will be able to design the, what you can say, customized products for the customer requirements, right? They will be able to design it. Bots will become mainstream in both front and back offices to automate the policy servicing and the claims management. Bots. So right now also in many of the, if you have seen many services that are provided by the banks, etc., they try to make it automized without having a human intervention. Why? Because it saves on the personal cost that they would be employing. ठीक है, टेक्नोलॉजी की तो एक ही बार वन टाइम कॉस्ट होती है, उसके बाद में आपको कोई कॉस्ट ज़्यादा देनी नहीं पड़ेगी. But you, if you are employing a human resource person, if you are employing a resource, then there will be a recurring cost for that, right? Next we have competition. So insurance industry, it has witnessed an impressive growth rate over the last 2 decades, and it has been driven by the great private sector participation, right? Like increasing number of insurance providers with various sophisticated products at competitive prices. Obviously, as and when the competition increases, the products that has been provided to the customer, they improve in the quality as well as there is a reduced pricing involved. Next is growth in specific segments. So business growth for the first half of financial year 23, it was driven by health, motor and crop insurance. The government's flagship initiative like Pradhan Mantri Fasal Bima Yojana, it has led to significant. See, first thing is, yes, there has been an improvement in the agricultural insurance segment, but apart from that, a major role played by this particular scheme is also the awareness component. ठीक है, awareness भी काफी आई है. People get to know that yes, we can insure our crop, we can remain aloof to what is going on right now in the agricultural market and all of these. Lastly, we have digital disintermediation. So October 2022, Policy Bazaar's PBP Partners launches its mobile app to facilitate the ease of insurance business for its advisors. So insurance industry, it was largely dominated earlier by offline channels like agents office, offline brokers, etc. Now with digitalization, there has been progressive improvement in the innovation, regulation policies, and now it is easier for the consumer to buy insurance through the multiple distribution channels. ठीक है, बहुत सारे distribution channels हैं, they can choose, they have a lot of variety to offer, so all these things are there. Next we have role of insurance sector in developing infrastructure in India. See how they are developing infrastructure, because insurance companies, they are a vehicle of savings. ठीक है, इनके पास savings होती हैं, that saving they invest, and by that particular investment they are driving the infrastructure growth. So do the existing rules fulfill the aspirations? This is what we need to answer. So first of all, we need to mention the rules, and then we need to mention whether they are fulfilling the requirement. So as a well-developed insurance sector, it is essential for the economic growth and development. Why? Because it provides the long-term funds for the infrastructure development. Insurance sector, up to some extent, they can facilitate investment in the infrastructure. It helps to generate long-term funds which are necessitated to build the infrastructure projects. Unlike banks and mutual funds, they have short-term funds. ठीक है, short-term funds से क्या होता है, फिर infrastructure sector का gestation period is huge and they are not able to provide the adequate returns, and they face the risk of running up of capital, right? So that is not great, and this is why the insurance sector is very, very important. Now investment rules, IRDAI, let us see. IRDAI stipulates that life insurers invest 50% in government bonds, 35% in the approved securities, and 15% in the infrastructure funds. Okay, this has been the mandate. It prohibits companies from investing in bonds rated below AA rating. This makes the majority of bond out of the investment portfolio, as the average construction project is rated BB rating, which insurers cannot buy into. So although these guidelines prevent investments to go into infrastructure sector, they also protect insurers from the financial risk. Obviously, IRDA doesn't want that the insurance companies start to fail. So that is why there has been a mandate that please invest in the at least AA rated bonds. Okay. However, it is to be noted that road and other infrastructure assets may not be viable at early stages since they do not generate much cash to service debts. But in the long run, they turn viable with the financial engineering. So what is the way forward that we have? Way forward is rating companies should opt for a different rating scales for infrastructure firms based on the likely recovery of the dues over the life cycle. मतलब पूरी life cycle में कितना dues recover कर पाओगे या नहीं. That means in totality you want to find out the profitability but over a longer period of time. ठीक है? Risk fund, they should be created to offload to pension funds and insurance funds whenever the date of commissioning is decided. This will reduce the financial risk and increase the cash flow into infrastructure sector. That means you have been told to create an alternative mechanism so that the risk that is being generated can be offloaded. Next is even surety bonds reduces the financial risk. IRDA has issued surety insurance contracts to regulate and develop this business. Surety bonds are what? There are three parties, right? So the third party is, it is a kind of guarantee where the one party guarantees for the payments, okay, of the other party. So like you understand the guarantee, the same kind of concept is applied over the surety bonds where the payment of the interest and other things are guaranteed, okay, ताकि risk ना रहे. In the backdrop of an ongoing growth in new infrastructure projects and difficulty which has been faced, IRDA surety insurance contracts not only seek to aid contractors but also enable the insurers to tap the huge potential. According to Economic Survey 2018-19, India needs $4.5 trillion to be spent over the next 25 years. So obviously we need support from insurance companies. Now this is how you sum up, right? You have mentioned that okay, going forward this is we need to do, and hence therefore it is crucial for the government regulator to work in tandem to achieve infrastructural growth for the nation, right? So this is what has been mentioned over here. This is it from my side. Thank you so much for joining in. I hope you have understood the lecture.